Hi, Vieira with stockmarketlive.tv. Well, today I have this recommendation to make, this live stock forecast addressed during today's live streaming session, and I'm referring to Apple and my upgrade to strong buy. Today at a price of $92.37. As you are aware, a few months ago, in January 2016, I upgraded Apple, recommending to close the short position. You have it on the blog of the company, a complimentary live market call, and I recommended to buy the stock. At that time, Apple shares, they rallied to $112. So this time I'm going to give you 10 valid reasons to invest in Apple, and instead of a neutral rating, I'm giving to Apple a strong buy rating. Bear in mind that the first valid reason and the most important to buy Apple and to close the short position, and bear in mind that you are not obliged to buy Apple, but in my personal opinion you are forced to close the short position in Apple. Last year in 2015, as you are aware, most market participants, they were bullish the stock. I'm not going here to discuss in detail. You have vast information on the web with target prices above $200, while we downgraded Apple on the blog of the company, complimentary live market calls. We have been discussing the process for years. Downgrade the stock to strong sell at a price $133. And we downgrade the stock to strong sell, saying that Apple was going to crash. Not crash to $50 or $60, but to crash. And therefore, you had to sell your long-term investment position, which I upgraded around $55. That corresponds to the pre-split price 386, and you had to reverse to the short side. And bear in mind that at that time you had stock gurus in Wall Street saying that Apple was worth by far more than $200. Okay, the case of Carl Icahn. And you had articles explaining in detail that Apple was going to crash, regardless of these bullish statements, as well as from investment firms such as Goldman Sachs and so on. So Apple crashed, and a few months ago, I repeat, you had my upgrade in Apple. Shares, they rallied to 112. And I announced when I closed the long position in Apple precisely that price 112. So what happened in Apple is that the stock or the share price meanwhile collapsed again to the same price as you saw it in January 2016. So the first valid reason to cover your short position is, in my opinion, that the stock market, or the stocks in general, in particular Apple at this point, is a very good buy. All right. Why? Well, one of the factors is that today most stock analysts or market participants, they are bearish the stock and they no longer believe in Apple. And since they no longer believe in Apple, you are aware that precisely the contrarian position is to invest in Apple, following the same principles that you had last year when they were all bullish, the stock crashed. All right. So the first valid reason is the fact that I never missed one single call in Apple. And you have the entire investment process described on the website of the company at stockmarketlive.tv. Complimentary one. The second valid reason is my upgrade precisely a few months ago at $92.37 that you have here, a live stock chart, at that time closing the short position. That is to say, I do not remain short the stock or Apple below that price. You can remain short if you want, but I don't remain short the stock, because when I consider that Apple was going to crash, my work, it is complete. The third valid reason to buy or to invest in Apple at this point is that instead of a neutral rating or a buy rating as before in January 2016, I'm considering that Apple is a strong buy. And it is not a strong buy because I visualize that the company is going to announce a wonderful quarter, because I don't consider that is going to be the case. and we are going here to discuss earnings, the coming earnings also in particular, in order to help you during this investment process. And my aim it is to describe the reasoning that if the different steps that I'm going to describe, they are fulfilled, and obviously it requires one investor to follow up the process. If they are valid and they are fulfilled, I believe that you are going to make a vast sum of money. So the fourth reason is the estimates are too low, in my opinion. And this is not a particular case of Apple, that stock analysts across different market sectors, and in most cases, they have been lowering estimates. When you lower estimates, it is very simple for a company to beat earnings. So because then they write articles about it, and they are going to announce that the company, the estimates, they beat estimates. And therefore, although, for example, comparing to the previous year, last year, earnings are not likely to be the same, or at least, for example, you can see a reduction in revenue, but they beat estimates. So this strategy is a Wall Street strategy that I already addressed here in free lessons a long time ago. They keep repeating the same. When Wall Street lowers estimates, it is very simple for a company, in particular for Apple, to beat estimates, and in my personal opinion, this is going to help eventually or potentially the stock price going forward. The fifth reason or valid reason to buy Apple or to invest in Apple at this point, and bear in mind when I say to buy the stock, I do not recommend one two-day trade Apple. Okay, this is very important. You buy to hold Apple at this point, unlike, for example, last year where you had to sell short the stock to hold, completely different. So this time around you buy Apple to hold instead of day trading or short-term trading, and you have to be patient. Now, having said this, once the earnings day approach, your question is whether it is worth to remain long the stock. Well, before earnings announcement or the day that the company is going to announce earnings, I don't know at which price Apple shares are going to be trading, okay? So assuming, for example, that you have shares moving higher, if by earnings you have a good profit, and if you don't want or you don't wish to remain long the stock, you can close the position with a profit, and then you can re-enter after earnings announcement, after the confirmation that, for example, shares cannot tank, all right, or resume the sell-off. If they cannot resume the sell-off, that will tell you, or that will be a very bullish situation, all right? Because so far, every time Apple announced earnings, the case, it has been a sell-off. So if Apple announces earnings, those earnings are not particularly, good or interesting, but if the shares are unable to sell off, to gap down, and therefore if you see buying on the gap, for example, on the dip, that I do recommend, if you close your position through earnings, I do recommend that after the earnings are revealed, that you assume a triple long position in Apple, because you will be, the risk will be by far less, all right? So, but nevertheless, or having said this, if you buy Apple today at this price, your risk, it will be, in my personal opinion, by far less than to wait for earnings. So it is up to you to make a decision, and I think that a decision you have to make at this point. If you ask me which is the risk of remaining invested in Apple at this point, that is to say, to buy the most at this point, I would say that the risk is very limited, and I'm going also to explain why, in my personal opinion, it's not in fact a personal opinion, it is a mathematical fact, you have zero risk going forward. The definition of zero risk, it is given, and we define this precisely in the basic trading course, it is given by your accumulated profits. So since we have been discussing Apple for years, all right, and you have been accumulating a vast level of profits, there is no reason whatsoever for you to be concerned or preoccupied with the fact that you are buying the stock today, and for example, next week the stock is trading at $88, all right? So I don't see a reason for this stock to go below $88 and a half in the worst case scenario, all right? So that is my personal opinion, therefore the risk is very limited. So what I did here, it was to recommend, once again, if you have a short position, to close it, as I did in January 2016 to February, and to reverse to the long side. Bear in mind that the rally, it was very good, all right? It went to 92 and 37 cents to 112, okay? A very good rally. So if this time, eventually, if we are able to repeat the same, that is the stock to move from this price all the way up to eventually 112, my friends, you are repeating history. And therefore, if you miss it the first time, eventually you can do it right now or at this point going forward. So please do not repeat the same mistakes. Don't tell me later on that you were not informed about it and you have Apple as a strong buy, unlike before, since as of today there are by far more investors bearish the stock than they were previously, in particular last year in 2015 when everyone was buying the stock at the top ahead of a crash. So, having said this, there will be a last or my last valid reason to buy the stock or to invest in Apple. It is related to Warren Buffett, all right? So if you buy the stock, my friends, and the definition of zero risk, if you buy the stock, and bear in mind the accumulated profit that you have by investing in Apple here, if you buy the stock as of today, you have to consider that you are buying the stock at by a far lower price compared to Warren Buffett or any of his employees. Because according to the information that I have, and bear in mind that this information, it has been shared with you, Warren Buffett invested in Apple more or less around $111, okay? So might be more or less the price that he invested in Apple. So by buying the stock today as 92 and 37 cents in the past couple of sessions, you are buying the stock at a by far lower price. So Warren Buffett has two possibilities. Or he holds on to his position and eventually he waits until the price moves higher, or what is likely to do, in my perspective, that is precisely what is likely to be doing and is going to help you, and therefore this is one of the key reasons to buy the stock. What I'm going to tell you is that he has to add to his existing position, because his existing or the former position, it is very high compared to the existing price. So in my perspective, he does not have any other choice other than to add to Apple former position. And by doing so, what is going to happen? You are going to see on the web, again, hundreds of articles saying Warren Buffett is adding to Apple, blah, 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 and you are going to laugh, because if that happens at that time, you already have a long position in Apple. Do you understand? So these 10 reasons, valid reasons to invest or to buy the stock, because as of today no one believes in Apple, not because of the earnings but because of all the reasons that I mentioned here. What else do you need? This is a reasoning, this is the algorithm in the end, and the only thing that you have or you need to confirm going forward, it is precisely all these points that I've just discussed here. The confirmation is very important, because the confirmation of these points, as they happen or as the time passes, it will give you, or it will, let's say, give you a confidence or a level of confidence that you need, and in particular or eventually even for you to add or to have several positions in this stock, okay? So this is very important, because this defines the points of discussion in algorithm that people, they don't know, they don't have any clue whatsoever what algorithm is. I just described these different points, the investment process, and the confirmation of it as time passes. So you have to take notes of what I've just said, and as time passes you have to check or uncheck those that they are confirmed or not confirmed, all right? So I gave you here valid reasons to invest in Apple. I don't think that you need, quite frankly, price targets. Price targets are, in a certain sense, misleading, in the sense that you don't invest necessarily according to price targets or thinking or considering how much you are going to make, but instead how much you can lose. All right, that has been always my reasoning. I never consider how much I'm going to make, but instead I always prepare for the worst case scenario. So for the worst case scenario, my personal opinion, it is around $88 and a half, my worst case scenario. And my worst case scenario, it is also to say, or to tell you, at least I hope that will give you some confidence in that matter, that you don't have any risk whatsoever, because this is a mathematical proof. That is to say, you go back to your statements, you go back to our track record, and you see that not only we never missed one call in Apple, as well as the fact, and this is the most important, you have been accumulating a vast level of profits by investing in Apple, either on the short side and on the long side. Okay? So I don't have any further comments. If you need my help during the investment process, you have then the live streaming sessions. If you have access to Yammer, you have the real-time comments and many other stuff that if you need help, you can contact us. Okay? So that's all. I wish you good luck investing in Apple going forward. Thank you.